everyone. My name is Marilena, and I will be your hostess for today. Together with me, I have Peter, our senior market analyst at IronFX. Hello, Peter.
Hello.
Thank you for joining us today as we're looking at the fundamentals driving the markets currently. So, Peter, what's new in the markets today?
Well, remember yesterday when we had mentioned the possibility that the differentials of the strengthening of the US dollar were weakening? We actually noticed that the US dollar yesterday stabilized. So that was an interesting development. And it was interesting also because we had the release of the Fed's last meeting minutes. And the document's content, as was expected, was tilted towards the hawkish side. Overall, there was a sense coming out of the document that more or less Fed policymakers were mostly worried on whether they may have not done enough to actually curb inflationary pressures rather than the opposite. So we may say that the document's content was hawkish in the sense that more rate hikes are to come, and Fed policymakers have a consensus about further rate hikes being aggressive, etc., etc. So overall, I would dare to note that the market's reaction was low because it was mostly priced in. So overall, I would expect markets' focus to turn towards today's US CPI rates for September.
And how about the US stock markets?
US stock markets also tended to maintain I wouldn't say a sideways motion. There are still some bearish tendencies, which are quite present, quite evident. But there is a difficulty which is being represented among indexes to actually decide on a clear path, whether they're going to be rebounding or whether they're going to be further bearish tendencies. I think that US stock markets are already focusing towards the earnings reports of big banks which are due tomorrow in order to get a sense of how the economy has actually developed over the past 3 months. And I would expect more volatility in the coming days.
And back in the FX market, I understand that the pound was the main market mover yesterday.
Definitely. We had a US dollar which remained relatively stable. The pound jumped. It was an opportunity for the pound, and it jumped practically on the reassurance of Bank of England that it would actually stop its temporary gilt buying by Friday. But on the other hand, I would dare to note that maybe the pound could have jumped a little bit higher, but we remind viewers that we had also the release of the GDP rate for August of the UK, which showed a contraction of the UK economy by minus 0.3% month on month, which created substantial worries. Also, the contraction of industrial production and manufacturing output tended to create worries in the market. And we have to note that we have a stressing sentiment among investors about where the UK economy is heading to. There are even some which are arguing that the UK central bank should provide further quantitative easing in the markets to calm the market somewhat. However, we will have to wait and see, as we have mentioned yesterday, up until Monday, ride the whole situation out to see how the bank will continue to react in the coming days.
Is JPY still weakening?
Yes, JPY is still losing ground against the US dollar, mostly against the US dollar. It's characteristic that USD JPY has reached a 24-year high. We haven't seen such prices since 1998. I think it was in August, yeah. And overall, the bearish sentiment is still present. It's interesting also in the sense that JPY seems to have lost its appeal as a safe haven because we have geopolitical factors around the world which show further tensions and escalations, and that does not seem to be reflected on JPY as such. It does not get any safe haven inflows. At the same time, we highlight that USD JPY has reached very high levels, and another market intervention by Japan is quite possible. So we may see some market reaction in the coming days.
And what's on the calendar for today?
Well, we already had a number of releases, but there was Germany's HICP rates, Sweden's CPI rates. I think the main release for the day would be definitely the US CPI rates for September. We are getting mixed signals here by the forecasts because we have the headline rate on a year-on-year level expected to decelerate, to slow down to 8.1% year-on-year. Such a scenario would practically signal that inflationary pressures in the US economy have peaked and are on the way down. On the other hand, we have the month-on-month rate, which is expected to accelerate. And should that be the case, that would imply that inflationary pressures are actually still simmering below the surface and could erupt at any moment. So overall, I would be expecting to see what the actual releases will be before making a statement on how the US dollar is to react. Overall as well, though, I would be noting that the CPI rate on a year-on-year level, even with the forecasted deceleration, is to remain at rather high levels. So most probably it will not change the Fed's aggressive hawkish approach. I would be noting, though, an interesting element here, and that would be that the core CPI rates show a reversed forecast in the sense that the headline rate is expected to accelerate on a year-on-year level, the core rate is expected to decelerate. And vice versa, the headline rate is expected to decelerate on a year-on-year level, the core rate is expected to accelerate. And vice versa, the month-on-month rates as well. So the situation seems to be rather complicated, and we would like to see the actual rates before making up our minds. Also, I would be noting from the US, the release of the weekly initial jobless claims figure is expected to rise, and if actually so, could be signaling that the slack in the US employment market is widening and could weaken the US dollar. And for the American session, I would be noting also for oil traders the release of the EIA crude oil inventories figure. It's on a weekly basis. It's expected to show a surplus of inventories rising. So practically, that would imply that demand was not able to reach production levels. Hence, the surplus has increased and could weaken oil prices. And that would imply practically a slack in the US oil market. Tomorrow, during the Asian session, I would be noting from China definitely the CPI and PPI rates. But I think the main interest of the market will be on the trade data. We have a Chinese trade surplus, which is expected to widen to 81 billion US dollars, while the import growth rate is expected to accelerate and reach 1% year on year. Now, such readings would imply that practically the Chinese manufacturing engine has restarted. On the other hand, though, we have news that Shanghai is about to impose a new lockdown, and that's on the negative side. But Aussie traders will be particularly interested because an acceleration of the import growth rate would imply a wider degree of Australian exports of raw materials towards China. On the monetary front, I would be noting during today's European session, ECB Vice President De Guidos. And in the American session, we're getting from the UK BOE, I think it's MPC member, Catherine Mann, which could be making some statements interesting for pound traders. That should be about it.
Any final comments?
Well, it's going to be interesting to see how the market is going to be positioning ahead of the earnings releases of banks tomorrow in the US for stock markets. Whether this sideways movement with slight bearish tendencies will continue for US stock markets. At the same time, I would also like to see how the CPI rates of the US are going to be affecting the markets. And they could have a wide effect beyond the FX market. They could also affect gold, they could also affect yields, they could also affect the US stock market. So it's an interesting release.
Great. Thank you, Peter, for your time and everyone for watching. Join us after a short break for technical analysis with Peter Yosif.
Welcome to the technical analysis part of the presentation for today. Now in front of your screens you have the US dollar index. It's the 4-hour time frame of the chart. I would be noting that every chart which is to be presented is to be of the same time frame. Will be the 4-hour charts unless otherwise stated. Now with no time to waste, as we mentioned yesterday, we saw that the US dollar index, after breaking the upward trend line, it has been guiding it practically since the 5th of October. Let's have a look. Yep, since the 5th of October, this one has been broken. The US dollar index corrected higher and, as we have expected, stabilized. Now we tend to maintain the bias for a sideways motion between the 113.70 and the 112.50. I would note that the last candlestick in the past few hours, the US dollar index has been dropping. It would be more clear if we drill down to the 15-minute chart, widen it. So we see a drop beginning here, and that's practically for the past 2 hours, maybe even 4 hours. Yeah, for the past 2 hours. So there are some bearish tendencies, but you can see that we had such similar bearish tendencies before. For the time being, we tend to maintain a bias for a sideways movement, for a bearish back to the 4-hour chart. For a bearish outlook, we would require a clear breaking of the 112.50 support line and the price action to start actively aiming for the 111.65 support level. Mind you that the RSI indicator below the 4-hour chart is currently at 52.53. Let's have a look, 52.6 and dropping. So that tends to imply that any bullish tendencies seem to have faded away. And on the contrary, should the oscillator's reading drop below the reading of 50 and actually start aiming for the reading of 30, that would imply rather bearish sentiment on behalf of the market for the US dollar index. For the time being, though, once again, we maintain our bias for sideways movement. Despite a bullish movement for the time being not being probable, but it's still possible. Let's cover the scenario. Now, for a bullish outlook, we would require a clear breaking of the 113.7 resistance line and the price action to start actively aiming for the 114.7 resistance level. So that will require a rise, a breaking of the upper boundary of the current sideways motion, and the price action to start actively aiming for the second resistance level. Note that most of the of the moving averages are still on the uptrend. Also note that if we drill to the daily chart, a clear upward movement followed by, or if we prefer, described by the upward trend line is being guided. Note the hesitation of the index for the past 2 weeks. It's interesting as also the US dollar index is at very high levels currently. It's, if I'm correct, at a 20-year high. Let's have a look. Yep, definitely. Back to the 4-hour chart. Adjusting the chart, the levels. Let's move now to Euro USD. Euro USD, which also maintained a sideways motion. It has stabilized. It's characteristic how dollar-driven the pair currently is. It's as if the euro has no initiative. It's just a reverse reflection of the US dollar index's movement. You can see that it has slight bullish tendencies in the past 8 hours. And for the time being, we also note that the RSI indicator continued to rise, reaching almost the reading of 50, implying that the market has reached a level which it remains rather indecisive about the direction of the pair. For the time being, we tend to maintain our bias for sideways movement. Also note how the Bulger bands have converged, implying lower volatility for the pair. For a bullish outlook, and should the buying momentum be continued of the last few hours, we may see the price action extending its rise, breaking the 0.9735 and start aiming for 0.9835. Watch how it provided resistance here, support here, so it's a pretty valid level. As is also the 0.9735, which is also being considered currently the upper boundary of its current sideways movement. For a bearish outlook, we would require a clear reversal of the current movement, a breaking of the S1, which would be also signaling a change of trend towards the downside. Now, should the S1 be broken, the 0.9635 support level, then practically the way is paved for Euro USD to drop to the 0.9540, which is the next level it provided support for the pair, and that was around the end of September. Let's have a look. Yep, on the 28th of September up until 28th. So that's a pretty valid level as well. Okay, let's have a look now at cable. My cable is interesting in the sense that we can make the readjustments of the labels so it becomes more clear. Cable yesterday jumped. You can see that it has risen from the lows of 1.0925 and it's currently aiming for the 1.1180. But as long as the price action remains between the R1 and the S1, we maintain our bias for sideways movement. So for a bullish outlook, we would require a clear breaking of the 1.1180 and the pair to start actively aiming for the 1.1425. On the flip side, for a bearish scenario, we would expect the price action to reverse its current upward movement, break the 1.0925 and start aiming for the 1.0760. Note also the RSI indicator. After some hesitation at the reading of 50, it's finally taking an upward movement. It's currently at 54. Should the upward movement continue and approach further the reading of 70, that would imply practically that the bullish sentiment is slowly but steadily taking over cable and could push also the price action of cable higher. Let's have a look also at the USD and JPY. USD and JPY maintaining an upward motion. Let me readjust this. There we are. Let's readjust those a little bit, the label, so it becomes more clear. Now, the pair has stabilized, and that's since the late American session. Over the Asian session, during today's European session, note how low the volatility is. It's interesting to note that the pair stabilized after the upward movement hit and actually broke slightly the upper Bulger band, forcing it to lower and correct widely to the stable side. And for the time being, we tend to maintain a bullish outlook. Why? Because the pair seems to continue to be guided, or at least the upward trend line remains intact. We would require clear breaking of this upward trend line in order for us to switch our bias for a bullish outlook. Also note the RSI indicator. It's above the reading of 70, implying that the bulls still are in control of the pair's direction. There is a bullish sentiment in the market. On the other hand, though, a note of warning here, the fact that the RSI indicator has surpassed the reading of 70 may also be implying that the pair is overbought and may be ripe for a correction lower. Nevertheless, should the correction lower occur, yet remain above the upward trend line we have just mentioned, we maintain a bullish outlook. It would be a reaffirmation of the upward trend line. Should the bulls maintain control and push the pair higher, with such words being more evident in the American session as we get the US CPI rates, and should the CPI rates actually excite traders and intensify worries that the Fed's going to continue on its aggressive rate hiking path, we may see the US dollar rising, the USD JPY rising, breaking the 147.30 and take aim of the 150. On the other hand, should the CPI rates slow down and show a retreat of inflationary pressures in the US economy, USD may weaken, which may drive US dollar JPY lower, break the prementioned upward trend line, break the 145 support line, and aim for the 143.50 support level. However, the results could be also a little bit lukewarm, which may allow for USD JPY to maintain a sideways movement, in which case we may see the price action reaching, if not even breaching, the upward trend line, or even correct lower and stabilizing between the 147.30 and the 145. That would be practically a switch from a bullish outlook in favor of a sideways movement bias for the pair. For the time being, once again, and as long as the price action of USD JPY remains above the upward trend line we have shown, remains bullish. Let's have a look at the second safe haven currency pair, and that would be USD CHF. Also sideways movement. However, the pair was able to rise above the 0.9960 and stabilize above it. Note how these two candlesticks, let me zoom it a little bit, have found actually support at the 0.9960. And that tends to imply that stabilization is just a slight step higher. For the time being, though, we have to correct the 0.9960 as it provides now support. It's no longer a resistance line. However, even when we changed it from a support to a resistance line, it was just below it. Let's go hunting for a new resistance line. It seems that it's going to be taking a long time ago. Okay, here we are. Yep. This peak here. I would be neglecting the shadows. I know they're still valid prices, but I get far more confirmations here. I'm keeping this one. And that would be in red. The 1.0215 resistance line. Yep, that's it. Lock this in. We adjust the chart. And let's correct the labels. Now starting from the final support line, which is now being placed at 0.9765. Second support line being placed at 0.9860. First support line is now being placed at 0.9960, given that it has broken price action of USD/CHF, has broken above it, and actually has provided even some support during the late Asian session today. Locking this in. First resistance line being placed at 1.005. Second resistance line being placed at 1.012. Third resistance line being now placed at 1.0215. So despite the correction of the labels and the levels, etc., we tend to maintain a bias for a sideways motion of USD/CHF. Note that the RSI indicator is slightly above the reading of 50, however, places no significant distance between its readings and the actual reading of 50. So that would imply that the market is rather indecisive and could continue to feed the sideways motion. Also note how the Bulger bands have converged, narrowed, which implies that there is lower volatility for the pair. Sorry. Nevertheless, should the bulls regain control, see these nice outbursts here and here, we may see the price action rising, breaking the 1.0050 and start actively aiming for the 1.0120. On the other hand, should the bears take over, we may see the price action dropping, breaking the 0.9960, and definitely would require testing of the 0.9860, if not even a breach below it, so that we are sure that the sideways movement has been abandoned in favor of a bearish outlook. Anything less, I would still be hesitating to call off the sideways movement bias. Okay, let's have a look at commodity currency pair AUD/USD. AUD/USD, which I think we should make some readjustments here. The latest price action of the past few days has shown us that there is a new support and a new resistance line, and we should correct that. And making a start with the support line, I would be placing it here where we have a throw. That would be the 0.6235. On the other hand, the resistance line is to be lowered, meet the peak here, and that would be the 0.6345. So we're talking about 110 pips difference here. On the other hand, I would be keeping the R2, which is pretty valid. There's too much commotion here to keep it, but we could be placing it here, but that's pretty narrow and too close to the price action right now. Okay, let's have a look at the validity of R2, sorry, of S2. Should be about 2-year low. Daily chart. Here we go. Yeah, nice touch here. And here. It's pretty, I'll keep it. It's pretty valid as well. And here. 1, 2, 3. So it's been tested also to the downside as well as to the upside. So that seems to be pretty valid, as does also the S3. Yep. It was last tested on March 2020. Okay, back to the 4-hour chart. We're adjusting. 59.80 remains as the final frontier for the bears. The S2 0.6110 remains also. The S1 has been changed and has been placed a little bit lower, and that would be the 0.6235 instead of the 0.6270. The R1 is also being changed, and it's being lowered from 0.64 to 0.6345. Let's lock this in as well. The R2 remains unchanged at 0.6530, and the R3 remains also changed at 0.6670, the final frontier for the bulls this time. So we tend to maintain a bias for a sideways motion, and that's being practically evident or supported, if you prefer, by 3 elements. The first element is definitely the breaking of the downward trend line. And the recent price action of the past 2 days has set the upper boundary of the current sideways movement as well as the lower boundary of the current sideways movement. So it's between here and here. The second element which supports the idea of a sideways movement is the RSI indicator. It's on the rise. It's about to meet the reading of 50, implying that the market, or if you prefer, the bearish sentiment, is slowly fading away, if not already. The third element would be the convergence of the Bulger bands, implying that there is a low volatility for the pair. On the other hand, though, but before that, so practically all these 3 elements tend to imply that the sideways motion is to continue, possibly between the 0.6345 like this and the 0.6235. Motion within this channel, sideways channel. On the other hand, though, we have to note that the 20 moving average is still moving lower, as is also the 100 and the 200 moving averages. So there is a direction downwards, while also, if we drill out to the daily chart, you can see that there is a steep downward movement. which in the long term has not been broken. So bearish tendencies may be present once again. Here we go. Let's drill back to the 4-hour chart. Should the bears reappear and take over, we may see the price action diving once again lower, definitely breaking the 0.6235. We would require a lower throw than this one, and the price action to start actively aiming for 0.6110. On the other hand, one could argue that practically the sideways motion could continue up until it meets the downward trend line, and that would be practically a make or break point. It's also discussable. On the other hand, should for any given reason the bulls take over, say for example the US dollar weakens substantially by the CPI rates which are to be released today in the American session, or say for example if the Aussie gains substantially due to better than expected trade data from China during tomorrow's Asian session, we may see the price action rising. Definitely would require clear breaking of the 0.6345 resistance line. Also, a breaking of the pre-mentioned downward trend line would be required in order to show that it's out of the bearish field, and the price action has to reach or test, if not even breach, the 0.6530 resistance level, which, mind you, had provided resistance here was aimed for and practically was the upper boundary of the sideways movement of the pair at this period. That would be from the end of September up until the 6th of October. It's quite interesting, actually. Okay, let's have a look at USD CAD. USD CAD, which has now clearly broken the upward trend line guiding it, has stabilized just below the 1.3845, may even be dropping a little bit, but overall the sideways motion is still present. Once again, I would like to make a readjustment on the lower support line, adjusting it to these levels here, as the price action has narrowed substantially, and that would be the 1.37 support line. So we're moving the support line 50 pips up in order to reflect also the low volatility. I wouldn't bring it too close to the price action. I would allow some space between the price action and the low boundary. We're keeping the S2 pretty valid throw here. And the S3 touch. That seems to be okay. To the upside, the resistance line definitely is still being expected to be maintained by the brief touch here. Let's have a also look at the validity of drilling out to the daily chart of R2 and R3. We could keep the 4-hour chart. Nope, daily chart. Required. You have a touch here, touch here, touch here. So the 140 seems to be valid as well, as is also the 1.4170. Maybe with the last one, it could be a little bit higher, maybe 30 pips. I'm keeping it for a touch here. Okay, back to the 4-hour chart. Readjusting. Let's make the necessary corrections on the labels. We've done that already, okay. So for the time being, we tend to maintain a bias for a sideways movement of USD CAD, and that's being supported once again by three elements, the same three elements as before in AUD USD. This time though, the price action has stabilized and broken the upward trend line guiding it. That should be since the 5th of October. Let's have a look. Yep. So that would be the first element, that the upward motion has been broken and now a sideways motion is in play here. I would be also noting how the price action has respected the 1.3845 resistance line, setting it as practically the upper boundary of its current sideways movement. On the other hand, should the bulls take over, given that we have three moving averages, the 20 moving average, the 100 moving average, and the 200 moving average, all pointing upwards, all having a slope to the upwards, that tends to imply that practically the price action could move higher, in which case we may see USD CAD rising. Definitely would require clear breaking of the 1.3845, so we get a higher peak than this one, and it could start aiming for the 1.40. Yet that would mean that it would be at new two-year highs. On the other hand, the RSI indicator is dropping, aiming for the reading of 50, implying that the stabilization is still in play. Should the RSI indicator though drop below the reading of 50 and start actively aiming for the reading of 30, that could push the bears into the foreground and practically drive the pair lower. For a bearish outlook, mind you, we would require clear breaking of the 1.37, which provided support here, and the pair to start actively aiming for the 1.35. Note how beautifully 1.35 reversed the downward motion into an upward motion, forming a V, a clear V. Okay, let's have a look at NZD-USD. NZD-USD also in sideways motion, beautifully bounded by the R1 0.5650 and to the downside the 0.5535. There's no reason to doubt either one of them, as practically the pair had troughs and peaks supporting the notion that they are the resistance support lines to come into play firsthand. Now we tend to maintain our bias for a sideways motion between the pre-mentioned levels. See how the Bulger bands have narrowed, implying lower volatility for the pair. On the other hand, we note that there is an upward movement, which is more evident in the hourly chart. Let's have a look at it. You can see it, one trough, higher trough, higher trough. Not a high peak though, but still it moves slowly but steadily upwards. If we zoom it out a little bit, here you go. It would be something like this one. So there is an upward motion here, which if it's being extended, it could definitely break the 0.5650, and that would be a prerequisite for a bullish outlook. A rise, a breaking of the 0.5650, and the price action to start actively aiming for 0.5810. On the other hand, should the bears take over, given that we have a downward slope by the 100 and the 200 moving averages, but should the bearish sentiment overtake the pair and lead it lower, we would require clear breaking of the 0.5535, which was a low point for the pair, and NZD USD to start actively aiming for 0.5430. That would allow us also to draw a downward trend line resting on the lower peaks. Okay, let's have a look now at gold. XAUUSD, which remains in sideways motion. We could lower the boundaries, but still I'm keeping them. Seems to be tighter. Also note how the Bulger bands have converged. Clear indication of low volatility for the precious metal. On the other hand, the RSI indicator is rising, aiming for the reading of 50. Could imply also some sideways motion here, but the market has not decided on the direction of gold's price. Nevertheless, we tend to maintain our bias for a sideways movement between the 1685 and the 1660. Now, in the case that we see the precious metals price rise, say for example, extensively rise, say for example, should US dollar weaken, we may see the price action rising. Definitely a break of the 1685, a clear break, would be required for bullish outlook. And the price action to start actively aiming for 1706. On the other hand, should we see a bearish movement, we may see the price action dropping, breaking the 1660, and start actively aiming for 1635. Okay, let's have a look at US stock markets. Dow Jones, a sideways motion. That would be between the 29,670 and the 28,950. As we have mentioned in the fundamentals, US stock markets are still trying to navigate among various factors on the fundamental level. Say, for example, the wide uncertainties on a geopolitical level globally. At the same time, we have a hawkish Fed. And we would not leave out the earnings season, which practically has begun. We had PepsiCo yesterday. And tomorrow we have the release of a number of major banks, high-profile companies, which could also move the stock markets. So I would expect the market to maintain this wait-and-see position on a fundamental level. At the same time, note how the Bulger bands have narrowed, implying low volatility for the index. By the way, we should actually label this chart that it's the Dow Jones US 30 cash 8. And let's color this in green, the black. Give me a sec. This is the gold price. Okay, it's far larger. Back to the Dow Jones. So, as we have mentioned, our outlook for the time being is tilted towards a bias for a sideways movement between the 29,670, which was tested, aimed for here, tested, so it's pretty valid. To the downside, we have the 28,950, which was tested here and here, provided support on both occasions. There was a break here, but for a short period, even day. So we tend to maintain our bias for sideways movement between the 29,670 resistance line and the 28,950 support line. In case we see the bulls taking over, we may see the price action rising, breaking the 29,670, probably breaking also above the 100 moving average, and start aiming for 30,340. On the other hand, should we see a bearish scenario playing out, say for example, if US CPI rates, instead of slowing down on a year-on-year level, they accelerate, taking the markets by surprise, making them more cautious about the Fed's intentions, we may see the price action of Dow Jones dropping, breaking the 28,950, and start actively aiming for 28,130. Let's have a look also at NASDAQ. Okay, NASDAQ dropped lower over the past 2 days. Definitely the 10,880 has now switched its role from a support line to resistance line. So let's reflect that by coloring it in red. However, that would mean that we're missing a support line, the ultimate one. So let's go hunting for a new support level. There you go. I would be placing it on this peak here. True here, sorry. And that would be the 9,000 in green, 9,740. With the lower level being placed somewhere here, that would be around the 9,325. Okay, let's make the corrections also on the labels. Mind you, by the way, when was this touch? 2 years ago. It was on the 29th of June 2020. 2 years back. Let's readjust the chart. Let's correct the labels. The S2 now is being placed at 10,120. The S1 is now being placed at 10,500. Could be narrower. The first resistance line is now being placed at 10,880. The second resistance line is now being placed at 10,000, 11,300. And the final resistance line is now being placed at 11,615. But there is a catch here. And I'm not talking about the R3. The R3 seems to be pretty valid. Actually, it could go a little bit higher. My main worries is that the current price action of NASDAQ has created new support and resistance lines. See, this is a resistance line which has to be altered. And this is a new support line which has to be altered. Pretty narrow to the price action. But the price action is narrowed. So that would be the 10,720. And this would be the 10,985. For the time being, it seems to remain in these levels. Let me reflect that on the labels as well. It will be interesting to see to what direction the price action will be breaking this sideways movement. This pretty tight range bound movement. We have to mention that. And I would like to also go back once again, have a look at the validity of this too. 2 years back. Ooh, that's nice. Let's have a look at these twins here. Yep. So we could widen it. Definitely there's a double peak here and here, which shows us that it was a former resistance line. But if we move it upwards, then we're catching practically an upward movement here, the limiting of a downward movement here and here. So that seems to be pretty valid as well. And keeping the renewed level, 10,310. Okay, let's correct also the label of S2, and we should be done. So for the time being, a sideways motion seems to be in play. In case we see a bullish outlook, we would require clear breaking of the R1 10,985 and the price action to start actively aiming for the 11,300. On the other hand, for a bearish scenario, we would expect the price action to definitely break the S1 720 and start aiming for the 10,310. That should be about it from all of us here.
My name is Christina, and today we'll talk about mark-to-market. The accounting technique known as mark-to-market values an asset, portfolio, or account based on its current market price rather than approximate book value. The mark-to-market value of an asset indicates how much a business would receive if it sold that asset at the exact moment. Fair value accounting or market value accounting are other names for mark-to-market. Investors should be aware of the value of a company's asset has decreased. Mark-to-market accounting works by valuing a company's asset at their current price according to the prevailing market conditions. These assessments are usually used in financial statements at the end of each fiscal year. Now, when it comes to Forex, mark-to-market is the accounting process that measures the current value of a foreign exchange trades. It shows whether a trader has made a profit or a loss on a trade and in turn whether the broker should credit a trader's trading account or make a margin call. For example, if you bought a futures contract to exchange pounds to dollars for a set exchange rate on an X date, the value of your trade will change based on market fluctuations during that period. If the exchange rate goes up, the value of your trade will also go up. This is because since the exchange rate in the futures contract is lower than the market rate, you could exchange more pounds than you get on the open market for the same amount of dollars. Mark-to-market will estimate how much your trade has appreciated, and the broker will credit your trading account with that sum. On the other hand, if the exchange rate goes below the rate in the futures contract, your trade's value will decrease. This is because you get less pounds than you get on an open market for the same amount of dollars. Mark-to-market will calculate a loss which the broker will take out of the money in your trading account. If the amount the broker withdraws takes your balance below the initial margin, then you will have to post maintenance margin to bring the balance back to the right amount. Thank you for watching.
Can you guys hear me? Hi, Kirk. Hi, Christina. Okay, just give me a couple more seconds while I set up the webinar. Okay. We'll give the rest of the attendees a couple more minutes before I start today's session on live trading. So today we'll be discussing about some of the setups, or if you guys have any requests, do let me know as well. Okay, just one more second right before I start my session. Okay, let's start today's session. Sorry for the delay because there were some technical issues. So let's start the session official. Can you guys hear and see me clearly actually? Let me know in the comment section. And let me know if you guys can see my typing. Right. Okay, so in today's session, we have a special collaboration with IronFX. Okay, that's great. Okay, thanks for the response. Yeah. Okay, so in today's session, we are partnering with IronFX to go through a live trading session where we share our setups. And if you guys have any requests, do let me know. So I'll be running through some of the major pairs, some of the setups that I have had this morning. Yep. So before I start, a disclaimer: the information in this webinar should not be considered investment advice or an investment recommendation, but instead educational materials only. So if you do want to take a trade, please do your own due diligence, right? Okay. So I am Annabelle and I'll be your host for today. So I am an analyst in Everest Fortune Group, where it runs where Everest Fortune Group runs an award-winning research firm. So we are the finalists for Best FX Research 2019, 2020, and 2021, as well as finalists for Best Equity Research 2020 and 2021. So the agenda for today, I'll be running through, before I start the session official, I'll be running through the IronFX VIP live trading room. If some of you guys haven't heard of it or haven't seen it, then I'll let you guys know where to tune into some of our webinar series, recorded webinar series, if you have missed any of our sessions. So some of them will be live trading, and some of the others will be educational. So if you are keen to learn some of our techniques like a Fibonacci, stochastics, RSI, ATR, etc., you can actually tune into some of our previous webinars because they are all recorded. And then I will start the live trading session today. So feel free to let me know if you have any questions or any comments. I have another page that is open on my left, so I will be able to see it. I'll respond as quickly as I can. Okay, let me just bring you guys to the important pages. So this is the IronFX platform that we are currently looking at. So if you guys are interested in looking at or listening to our past webinars, just click on the webinar right here. I will paste the link for you guys. Okay, so this is the link that you can go to if you are looking at, or if you want to look at any of our past series. So click on English, and then these are all the English sessions that we have had. So there's support resistance, pullbacks, overlaps. There is Fibonacci series, multi-time frame analysis, average moving strategies, trend indicators, top price action setups. There are a lot of educational materials here, as well as our live trading sessions. So if you do want to check it out, that's the page to go to. And then I will bring you guys to the VIP room. So access our VIP trading room. This is a special partnership between IronFX as well as Everest Fortune Group. So on our VIP page, right, there will be exclusive market forecasts, so you can trade and learn with our interactive institutional grade market forecast. We'll be posting some of our analysis on the page itself. I will show you guys later. You can ask our experts because it's an interactive platform where there are interactive charts. So you can ask any questions you have on the markets, or if you have any questions pertaining to any currency pairs, you can reach out to any of us through the VIP portal. So request for market forecast as well. You can let us know, like, for example, if you have a position on USD yen, and then you would like to know, hey Annabelle, or hey Desmond, where do you think the market is headed for USD yen? So you can ask us where is our forecast, and we'll be able to give you a professional guide or advice, right? So you can access our premium services based on what you require. So there are 5 different tailored types depending on how much you have in the account itself. So if you already have or already are a trader or a client of IronFX, these are the amounts that will get you through to different services. Okay. So for example, if you have a 15,000 deposit, you will be categorized under the diamond category. And then you will have the ability to DM our direct message our prop traders and ask questions directly. So we'll have a priority support as well, weekly private 30-minute group call, and free VPS access. So how you're going to sign up or how you're going to check it out is through this VIP room. Let me just give you the link. Okay, this is how you create the account. And let me see if I can bring you to the VIP portal to take a look, yeah? Let me see if I can load it. I'll run through it quickly. Shoot. Give me 1 second. It seems like I don't have it here. Let me see if I can find it. Give me 1 second, yeah, guys. Just let me check if I can pull the IronFX a VIP platform so I can show you guys how it's like, and I can explain through some of the advantages of the platform itself, right? Just give me 1 second. I'm sure I can find it because previously I've opened it before, but I think it's shut down. Okay, I can't seem to find it. Okay, let me try one more time. Maybe I could log in. I think someone actually logged out. Yes. Okay, got it. Okay, thank you guys for waiting. So this is the platform itself, right? When you log on, you'll be able to see this depending on what access you have. So this is the section where you will be able to chit chat with our prop traders or any of the analysts. You can come here, you can just ask us, oh, hey, what do you think of Euro USD? It has been on a downtrend for the past few weeks. Where do you see market headed? Okay, we'll be able to reply on the spot as soon as possible. Okay, potential setup is where our analysts or our prop traders, they will come here and let you know which key levels to watch or what are some of the potential setups that we have been monitoring. Okay, news-wise, we'll be updating it. We have updated it very often. Okay, so these are the important news that we have, right? So we'll try to update it on a daily basis. Majors, so we have our DXY, Euro USD, we have our commodities, indices, crypto, your crosses as well. So depending on what you're trading, we have all the pairs here. So if you have something or a currency pair that is not here, do let us know. So for example, how this platform works is DXY. So today I have actually posted one of my analysis here. So what you can see here is that the analysis will actually let you know exactly where my points are. So it won't confuse you, right? Some charts, if I give you a chart like that and I tell you that, hey, price A, price B, but you would not know what my strategy or where my points or how I actually derive at that point. But with this, it's very personalized in the sense that I could highlight the levels and you will know exactly where I'm talking about. Okay, so you could come here, you can say, hi, and I'm looking at maybe price 112.83. Okay, you can highlight this level and then you can link it to one of the levels here, for example, right? So you can link it and then I will know when I hover over, I will know exactly what you're talking about, right? So this is very customized. Okay, so this is how the platform works. Depending on which tier you are at, you'll be able to access a one-on-one, sort of like a trading advice, right? So I think it's very useful. Do check it out. Okay, so let us start today's session. Any questions? Oh, I cannot see anything on the screen. Does the rest of you see my screen? I'm currently looking at a price chart. Okay, so for Puno, maybe I'm not too sure, but if you are using Zoom, you should be able to log on and see my face or the screen itself. Yeah. Yeah, I think a laptop will be good, right? Hi, Rahim. Okay, let's start today's session. Let me look my charts. If you guys have any requests of any currency pairs, do let me know. If not, I will just run through what I have. Okay. Okay, wait, let me load another chart because these are the charts that I have I've done in the morning. So usually what we do is we come in the morning and we'll analyze our own charts to know where the market is headed. Okay, never mind, we'll just leave it here. So DXY, let me remove this. Okay. What I like to do is I like to zoom out to my weekly first to see where the market is actually headed right now. So as you can see on a weekly chart, my prices has been on a very strong ascending trend above the Ichimoku cloud. Right, on a very strong ascending trend this way. Okay, prices of the DXY or USD has been moving up. Then we can zoom into our daily to see whether there are any channels that you can draw or any lines, ascending trend line or descending trend line. So you don't have to force it if there is no channel itself, okay? So this looks like quite a nice channel, so I will leave it, right? You can see that prices has been respecting the channel itself, creating higher highs and higher lows, right? Okay, now we can zoom into the 4-hour where the reason why I use the multi-time frame is so that you know, smaller time frame allows you to execute your positions, right? If you are trading on a weekly chart, probably you have to hold your positions for a longer time. But if you are trading on a 4-hourly, you could do a swing trade or a daily trade, or if you're a scalper, you probably can zoom into a 15-minute or a 1 hour. So depending on your trading style. So for my DXY, this is the 4-hour chart. Okay, let us draw some lines. I will probably put this as my support level. Okay. My resistance, sorry. This will be my resistance level 1. Okay. Let me just draw a couple of lines first before I actually do my analysis on it. So these are just rough gauge. You don't have to worry. I will define it. I will redefine it later. Okay, I'll draw this as a zone. Okay, let's draw some lines. Right, you can see it forms very nicely. Okay. I will draw my lines first, then I'll explain how I actually derive at the levels. Okay, so right now I'm looking at DXY is falling quite rapidly on a 4-hour chart. As you can see here, it's rejecting this level. Okay, the reason why I put my resistance here is because it's the previous swing high, as well as if I project forward from here, 0.1, 2, 3, this is my 61.8. So it's sort of like in sync and in line with, coincides with this level here where my previous swing high is. And if prices were to actually come back here, right, 0.1 to come back up here to test, this will be a key resistance level, right? Then my second resistance is placed here because of projection. This is my 78.6 level. So if it actually breaks this level, prices might come up here, okay, to test around this upper tier of my channel, and then my 78.6 Fibonacci projection. Okay, so if it breaks this level, then yes, it will probably fly to this level here. But looks like my prices are not moving up as we expected, but there is a very strong descending or more like a engulfing candle here. We'll see, because this is a 4-hour chart. So if price is not moving upward, it might come down here to test my first support. The reason why I actually put my first support here is because this is the previous swing low, right, at this point, as well as my overlapping support. You can see that price actually came here to test many times. Okay, this is slightly an outlier, which I don't really like. So you could actually highlight a zone here instead. Okay, but let's do it out first. So price came here to test 1, 2, 3, 4, 5, 6, then break. So if price come here, this is the overlapping support level. So if it comes here, definitely there will be some resistance at this level. That's why I put my support here. It also sort of coincides with my 78.6 projection level. If I start from 0.1 to 3, projection forward here would be my 78.6. So this is my support 1. Support 2, I will put at this level here because previously 2 times it has tested once, twice, thrice. So if it comes back here, this will be a key support level. It will test again. Okay. Hi, Michael. Hi, those who have just joined. If you have missed some of the past 20 minutes of the session, don't worry because these are all recorded. You can go online or YouTube or IronFX platform to rewatch it. So no worries. Okay, so the setup now we are doing is the DXY. We can see that prices has been on a rise and respecting the ascending channel. But right now, I can see that, price, there's a very large red candle. That price is reversing. So it's sort of like rejecting this level that I'm looking at. Okay. Resistance. I think it's rejecting this level. So I'm predicting that, prices might come to my first support to test again before any movement. Okay, so in general, my take on DXY at the moment is that it might go down because it has rejected this price level for the past couple of days, right? From 10 October until now. And it is forming a very red engulfing candlestick here. So if it rejects and it goes down, it means that our USD is weakening, right? Because DXY is reflecting the strength of the DXY. Sandeep, how did you draw the second resistance level? Oh, you mean this one? This level? Okay, I can show you. Let me just remove drawing, okay? So usually I like to plot my lines first because then I will know exactly or a rough gauge of where my resistance or the key support resistance levels are. So I like to roughly gauge where the important points are first. Okay, so these are my support. Give me 1 second. So these are my support level. This is my first resistance, right? So you are asking me how I draw my second resistance. I am using a Fibonacci projection. 0.1, because this is the swing low. 0.2, 0.3. Okay, if you want to know how we actually draw our Fibonacci, you can take a look at our previous Fibonacci series where we'll teach you how to draw all the lines. So for this, if you take a look, this swing high here coincides with my 61.8. And if you look back at my daily chart, right, there is no previous benchmark or previous swing highs or swing low for me to gauge. In this type of situation, what I like to do is to use projection because like the term itself defines it, it's projecting forward because we have no gauge at all. So if you project forward, this is the 78.6 level. That's why that's my second resistance. So this is actually a Fibonacci projection. That's how I project it. We are projecting how far this will go. Okay. Seisan, I can't place a trade on TradingView. So this is just based on our daily analysis, how we think the setup might be. Right. Okay. So let's move on. We can take a look at maybe USD JPY. Okay. Also, it has been moving on an upward trend for the past few weeks or I would say months. So what I like to do, go to the weekly chart, take a look. So you know that, hey, price has been on a rise since 2012 up to date. And it has been ascending very rapidly. You can see here. On the daily chart, see if you can draw any channels. But if there are no channels to draw, do not force it because then it will your analysis might not be accurate. Okay, so there are no channels that I can draw here. I will not force it. Then we zoom into the 4 hours. At this rate, let's see. I will usually draw some levels first. Let's go to monthly. Okay, you can see at this level here. So exactly where my point is here, this is the previous swing high, which was in 1998. Okay, and then the next swing high is here, 160 in 1990. Okay, it's quite far back, but these are all the points that will matter. Okay, because we will have to pull back the charts to see where our swing high, swing low prices are. So if I zoom back to the 4-hourly chart, this will be my resistance 1. And if 160 is too far, and if you're executing a trade, don't worry, this is just a gauge. You can actually use a projection if you feel that 147 to 160 is too far. So there's no hard and fast rule that you have to place, exactly at the previous swing high. So based on this, I will just put my first resistance first because it's more executable and it's more it's closer to where we are trading now. Okay, it has to be executable as well. Not something that is too far-fetched. This is too far, in my opinion. Okay, so based on the 4-hour, that will be my first resistance. Okay, second resistance, I'll do a projection forward, which is, let's try. Let me see if I can draw any projection. Okay, this could be your projection. You could use the 61.8 or 78.6, depending on what is your risk reward ratio. So based on this, I can say that, if there is a breakout on my first resistance, I could do a breakout buy entry here at this level. Breakout buy entry to my 61.8, or if you have a bigger risk appetite, you can go to 78.6. Okay, so it's depending on your risk reward. So this could be my second resistance here. Okay, then my support, definitely it will be here 1. Okay, if you see that it's too far as well, you can move to somewhere that is nearer, meaning to say you can do a projection as well, because I do not have any other benchmark right prior to this. So you could use a swing high or swing low, or this is a previous swing high, right? So this would be a valid point. I'll use this as my support 1, and then this could be my support 2. This is reasonable, right? Let me see if there is a 127 level. Yeah. Okay. So I'll put this level here. So usually at the 127 levels, price tend to reverse. Okay. 127 is a 127.2 is a extension, Fibonacci extension level right here. So I'll just leave this here. So now we can zoom in more to define your chart so that you could potentially take a position. So we know that, prices of our USD, because we're looking at USD JPY. And if USD is going to strengthen further, you know that price of my USD JPY might move up more. Correct? So then in this case, if I think there is a news tonight. Let's see. There's an important news. So usually I like to go to Forex Factory to take a look. It tells you all the important news. Yeah. So this is SGT. So tonight there will be a news at 8:30 p.m. Regarding CPI and its numbers called CPI. So if this is a good or expected news, then probably there might not be much changes. But if it's a surprise, then you have to take a closer look. Okay, so if USD were to go further up and break my first resistance here, my USD JPY might fly to this level. Or if it's very strong, then it might go to my 78.6. So it's depending on what news. But if there's a breakout, it will definitely go up to these levels. Although I'm quite worried because there is a 127.2 extension. So usually prices tend to reverse at this level. Okay. So keep a lookout. If there is a breakout, it will fly to your 149.0 or even your 151. Okay. If it doesn't, then we are looking at prices coming back down to my first support where my previous swing high was. See, it tested so many times. before it broke this level. So it tested once, 2, 3, 4, 5 before it broke. So if it comes back here and break this level, it will definitely test this level first because this is a magnetic zone. It will definitely test this level, and if it breaks, it's gonna go down to my second support because this is where the previous swing low sits. Let's see whether there is any fib levels. Not that great. Yeah, probably about 38.2. So if you look at this fib level, probably on a daily chart, might be cleaner. Yeah. So if you look at the daily chart, this fib level, I did a Fibonacci retracement is at my 38.2, this level. Fibonacci retracement. Zoom into 4 hour. Yeah, this is the level that you might come back to test for my second support. Sisan, would you advise going short at 147743 for USD JPY? 147, that's very specific. 147743. Let me draw. Wait. Give me a second. 7. You mean at my 127.2 Fibonacci extension? Is that how? I don't understand how you derive at the 147743 unless you're telling me it's at the previous swing high. Is that? Yes. Personally, if you were to trade reversals, I think that would be a very strong point of reversal. If once my price, this is just based on my own opinion. So what I like to do is if there is a few points or a few coincidence, because this is my previous swing high, right? 147.7 is my previous swing high. And it's also my 127.2 fib retracement, right? From here to here, if you can see. 147. Okay, let's say it's about here. Okay, so based on this fib retracement, right? Okay, for example, okay, 147743. So this is the previous swing high, which is also somewhat near my 127.2, right? It's probably like just a couple pips away. I would actually do a reverse trade here once it moves up this level. So once it touches probably around this zone here, once it touches this zone here, I might do a short, and then you can just place a small stop loss, right? If you're playing just this reversal here, can put a small stop loss probably like at 141.4. And if it works, then your risk to reward is very high. So for example, if it comes to this level here and then touch this zone and it reverses, your stop loss is just this area here. Oops, my handwriting. Stop loss here. Your take profit should be at your around your 100% or slightly before. About this level here. Maybe I'll put it here, depending on risk to reward of your own choice. Yeah. So in my opinion, if it aligns with my 127.2 and my previous swing high, yes, I would take a reversal trade because to me, personally, my stop loss is actually relatively small to my take profit. So risk to reward could be 1, 2, 3, or 4. Yep. But do your own due diligence. That's my own opinion. Okay. All right. Let's move on to, okay, can take a look at GBP. Okay, same thing. Go to the weekly chart. Okay, see whether where the price is headed, right, in a general direction. So you can see that price has been creating lower highs and lower lows. So obviously the trend is downward. Okay. On a daily, can try to see whether you can draw any channels. But don't force it like I've mentioned, because it won't. Yeah. So there's a breakout already. I wouldn't draw this. Okay. But you know that in general, prices are on a downward trend. You could draw a trend line because it's just a rough gauge, you know. Okay. Yeah. I'll probably do this. Can dot it. Yeah. Then move on to my 4 hours. Okay, let's look for some levels very nicely here. Support 1. Oh, okay, and my 50%. And then the next one I'll put here because this is where all the price were trying to break, but it failed. Support 2, 50 and 78. Okay, support 1, support 2. Now we are trying to see where our resistance is, probably at this swing high here, which is my overlapping resistance. Then you can do a projection forward to see where my second resistance might be. Okay, swing here or here. Okay, it's not that great, but okay, I think here will do. You could actually put it at a previous swing high as well. Okay. Let me see. I think I'll put here. Okay, I think I'll put at this level here because this is a zone. Okay, ignore the projection. It's not in sync. Okay, anyways. This will be my second resistance. Now let's zoom in. So, as you can see, my prices are kind of like breaking into, or it seems like it's moving in an ascending manner at this area, right? So it failed to break my first support at 50% retracement. So prices are actually moving up. If it breaks my Ichimoku, then there can be a confirmation that it might be a bullish momentum to bring it to my first resistance at this level. The reason why I picked this level here is because this is the level that my price, there's a lot of a magnetic zone where my prices came here to test many times. 1, 2, 3. Okay, this one is sort of like an outlier, but it is still attracted to this area many times. 4, 5. So if price were to come here, this will definitely be a test zone. So this is the magnetic area where I put my resistance. So price seemed to be like it's coming up this way. So if it breaks this level, we can confirm a bullish momentum to bring it to our second resistance, where my previous swing high as well as my overlap resistance. So price came here test 1, 2, 3, 4. That's why I put my second resistance here instead of using the projection. Okay. Now, if my price actually come back down and test my support again at my 50%, price then will break. If price break here, I can confirm a bullish momentum to bring my prices back to my 78.6 second support where it came here to test. Right, price came to test here twice. Okay. Okay, Puno, can you give me an example on XAU USD also late? Yeah, sure. After this, I could do the XAU. In today's session, we'll end slightly early because we have another session that is going on. So probably XAU USD will be my last FX pair. Okay. So let me repeat this one last time. Okay, since the GBP USD has been on a decline, you could actually trade with the flow, meaning to short it if there's any chances here, because this is the magnetic zone. So how it works is that, let me erase all my drawings. I'm too lazy to redraw. Okay. So what I'm saying is if you want to trade with the flow, because GBP USD has been on decline, right? You don't want to go against the flow. You can wait for the prices to come up to this level to test while you take a reverse position here. You can take a short if it comes to this level. What I mean is that this resistance level is drawn here because prices has came here to test 1, 2, 3, 4, 5 times. So this is definitely a key resistance area or a magnetic zone where prices like to come here to test. So if price actually come here, there will definitely be a resistance here, right? Unless there is a big news that is coming out that GBP will fly all the way up, then you can't take any trade. But if it's just a normal day or another day, then price might come here to test. Hence, you can or might consider to take a reverse position here, just a small one. So you can put your stop loss probably above it for some buffer, take a short to stop maybe at this level, depending on your risk to reward, or whichever method you use. You could use the Fibonacci, you could use your RSI, or you can use stochastic Ichimoku, whatever it is. Your risk to reward should be good because this will definitely be a resistance zone here. Okay, so you could do a short position here, given that, you know, my GBP USD is on a decline. I have a very strong resistance here. I want to trade with the flow. Okay. Okay, now let's move on to our last currency pair. XC USD. Okay, Sing dollar, no. Fingers. Okay, right. So usually for gold, it's the opposite of my DXY, right? Okay, so look at gold. So zoom out weekly. Okay, weekly, you can see that this is quite a clear double top. And price looks like it's forming a double top because it broke my neck area. So it looks like it's coming downward. Daily, let's see whether I can draw any channels. If there's no channel, don't have to force it, but this looks like an acceptable channel that I will draw. Okay, price has been respecting my Ichimoku and my downward channel. So I'm straight descending channel here, creating lower highs and lower lows. So usually price will actually, based on this, it should come down to this level at least, creating a lower low. Okay, price action. But with that, let's zoom into the 4-hour. Okay. Oops. Okay, so at this rate, I am looking at this being my resistance level here. Resistance 1. And my support, you can actually put it here. Okay, if it's too far, you can actually put it somewhere here. Okay, let's just put it here first. I'll define it later. Okay, now let's draw some fib levels. $61. It's not that great. Okay, let's do some projection. Okay, so my first resistance, 61.8. You can draw your second resistance here at your 78.6. Or you could actually play it to the previous swing high as well. Okay. Second resistance. Okay. So this is how I draw it. Let me try to draw this. Okay, anyways. Okay, so now let's zoom in. Okay, the reason why I put my first resistance here is because this is a swing high, has one, two, many times. So this is a overlapping resistance. So prices will definitely come here to test. It also sits with my 61.8 projection level. Okay. I think, wait, give me 1 second. Yeah, it sits at my 61.8 projection, meaning 1, 2, 3 project forward. This is my 61.8. So it coincides with 61.8 projection and my overlapping resistance. So prices, if it were to come up here, it will definitely test at this level. But my prices are currently here. So what I'm looking at, actually, this should be my first resistance. This should be my second resistance. Oops. No, this. Okay. This is first support and then second. Okay. Let me redefine it. Okay, this is clearer. So my prices are actually trading here. So if price were to move up, break this Ichimoku and move to my first resistance, it will definitely test at this level because 1, 2, break, come back, it will test here. This is my overlapping resistance 1. If it breaks this level, it will definitely test at my second resistance, which was my previous swing high. This is a definite resistance area. There is too many points that it is a key resistance area. So if it actually breaks here and comes to this level, you could play a reverse, a short position at this area here. Okay. So if price, it seems like it's ranging a little bit here, but for the past few days. But if price were to come back to the support level, it will test at my 61.8% retracement. So this is a 61.8 retracement level, as well as my overlapping support, right? You can see that prices actually come here to test many times, but it failed to break. So if it break this level, it will confirm my bearish momentum to bring my prices back down to my previous low, which is 1613, as well as my 61.8 projection from here. 1, 2, 3 project forward here. So my gauge is that if it's still respecting my descending channel itself, price should actually come back to probably around this area because it has to create a lower low, create another lower low. Okay, probably around this area, it should come to this level before it bounces up, right? But based on the DXY, okay, prices seem to be slightly ranging. I'm trying to use correlation to relate my XAU as well as my USD pair. So price seems to be ranging at this level. So we are waiting for major news probably tonight to bring this either up or down. Right, we're waiting for some news to impact the prices or make it move before I can correlate. But looks like it might be going on the upside, I guess. Okay, then if you look at gold, if price of DXY go up, my gold should be going downwards. Okay. So for Uno, how do you confirm with the news if you go up down? If you go to Forex Factory, there will be a lot of news. So those in the red folders are the important news. If you do not know what they're talking about, there is this folder on the where I'm hovering over. Click on it and you can read a synopsis on it, like the details on how it will affect the currency pairs. It might not 100% move the markets, but usually people tend to trade with this type of news. Okay, so if you look at it, CPI numbers means consumer price index. What it does is that it measures the change in prices of goods and services purchased by consumer. Actual greater than forecast is good for currency. So usually they will put here, the forecast is 0.2, but if my CPI numbers come out to be 0.4, which is better, means that the USD is strong. So it will affect my currency pairs. So this little news might or might not affect the market rapidly or in a very exponential manner, but these are the things that will affect currency pairs slightly. Okay, and usually people sit out of these time zones when they are gonna announce news, because you do not know whether it's moving up or down. So usually for non-experienced traders or technical traders, they might sit out in this session or the time when they're gonna announce. Okay, because it's very dangerous. It might just close out all your positions. Okay, so I've come to the end of the session. You're welcome. So I've come to the end of the sessions, running through a couple of my setups of my currency pairs. I hope it's useful, and I hope you have learned as much as I did. Thank you guys for tuning in, and I will see you guys in the next session. Thank you.
Everyone, my name is Emily. We have previously discussed central banks and their role, but this time we will focus on the UK Central Bank. The Bank of England was founded as a private bank in the 1694 to act as a banker to the government. In the 1946, the government nationalized the Bank of England because of its importance to the UK economy, while in 1997 the government offered it independence in some areas to avoid interference and influence from party politics. The Bank of England is made up of 3 committees which make important policy decisions. We have the Monetary Policy Committee, the Financial Policy Committee, and the Prudential Regulation Committee. These are all chaired by the governor. They also include people from outside the Bank of England who have valuable knowledge or experience. They are called external committee members. The Monetary Policy Committee is made up of 9 members: the governor, the 3 deputy governors for monetary policy, financial stability, and markets and banking, a chief economist, and 4 external members appointed by the chancellor. The Monetary Policy Committee decides what monetary policy action to take and announces its policy decisions 8 times a year. The central bank uses 2 main monetary policy tools. It sets the interest rate that it charges banks to borrow money from them. This is the bank rate. It can also buy bonds to lower interest rates on savings and loans through the use of quantitative easing. Bank rate, also called the Bank of England base rate or just the interest rate, is the most important interest rate in the UK. The Monetary Policy Committee sets bank rate. One of the actions the monetary policy needs to take is to meet the target that the government sets for inflation, which is 2%. The current bank rate is 1.75%. Higher interest rates usually mean a stronger currency. The pound tends to strengthen whenever the Bank of England raises interest rates. However, the Bank of England's current task, like that of other major central banks around the world, is quite challenging, as it needs to manage surging inflation and keep the economy from falling into recession. That's all for today, guys. Thank you so much for joining us. Stay tuned for next week. Bye-bye.